switch across. We have George Joseph joining us. He's CIO and CEO at ASK Investment Managers joining us this afternoon. George, it's been a while. Firstly, wishing you a very happy belated birthday.
Thank you. Thank you so much.
Hope you had a good one. Okay. George, let me start off with the earnings, right? Because that's the crux of it at this point of time. Anything that stands out and how have the earnings largely been according to you? Did anything surprise on the upside?
So earnings, it's a wonderful question. The earnings is the very, very clear indicator in this result season. Clearly shows that the mid and small cap has outperformed and actually it is doing well. So double-digit earnings growth across large, mid, small is something which we are seeing after a long time. So it's very encouraging scene at this point in time.
Okay, and can it sustain? Can this kind of an earnings growth clip? I mean, I know at the broader end it's been much stronger than at the large cap end of things, and I'll come to that. But can the broader trend sustain and continue to surprise us?
Yeah, so from, if you look at from the growth, valuation, and also the quality perspective, for all three need to look at in tandem. And from that perspective, I feel the large caps is a pocket which will show 15% kind of earnings growth in FY27 and may accelerate going forward. So relative valuation wise, the large cap as a pocket looks very, very interesting. So ultimately, as an investor, what do I think? I need to think in next 3 years, where do I make money? I'm not worried about which segment is growing, which segment is having high quality, and which ultimately the returns has to speak for itself. And which segment, according to me, will do very well related to others. I think the large cap is a space to look at. Couple of reasons for it. One, you see the earnings growth is increasing. 6% earnings growth moving to 15% is a big change. Secondly, the valuations have been beaten down to dust, mainly because the FIs have been a one-side seller. And thirdly, the ETF flows, which were significantly negative, especially emerging market, MSCI ETF flows. I think, that coming back will be the reason to believe that, the segment will look very attractive and also will do well. Historically, if you see, large caps have done well when FIs have come back, and mid and small caps have done well when mutual funds are getting inflows. So last 4 or 5 years, it's mainly mid and small cap is a game in town. And I think it will shift towards large caps at this point in time.
Okay. Within large caps, George, it's IT, which has done extremely well from the lows. I'm trying to understand as to how should one position oneself in IT now? Say you're looking for a fresh position. Is this a good time to go out and buy IT? 20% rally?
Definitely, yes. Relative to the market, if you look at, you're getting 15 to 18 times price to earnings and very high quality names in IT pack, be it large cap, mid cap, and some of the small cap names also. And there is no expectation there. People are all knowing the story around Anthropic and the news flows around, these companies are going to be dead soon. And these are the questions which investors are asking me as well, every now and then. Because we are overweight on IT, every now and then people ask this same question, saying that, these companies are dead and, why are we holding it in the portfolio? But my view is, you have to, again, the point which I mentioned earlier, the quality of these businesses are superb. Cash generation is massive. 8% kind of free cash flow yield you are getting these businesses at this point in time. There was a point in 2021, we were not very comfortable with the valuation. But right now, the valuations have eased quite a bit. And when you look at from the long-term growth trajectory, the one of the questions which people don't have an answer on is, is these businesses going to get disrupted? Is it a technology company? My answer to them is, this is purely a services business, right? It is not a technology. They are not making any chips, or they are not making any cutting edge technology products, which can get disrupted. Obviously, some coding jobs will get disrupted, but some testing jobs and debugging jobs and analytical jobs will get created, which people don't have any idea on. But if you look at from the trajectory of earnings these companies have reported, it has beaten expectations or in line with expectations. And as we move forward, the biggest delta is going to come from at least next 3 to 4 years, mainly from the AI transformation projects, because companies are complex. To handhold these companies to make sure they are AI native companies, it takes a lot of time. And that is what we learned from some of the top guys of, Infosys and all these companies. When we talk to them, what we realize is there is a good amount of business, upcoming business, which is they are going to garner from the transformation projects. There was earlier, you would have remembered about of a wave of digital transformation. Similar way, AI transformation is the game in town, which will add to a leg of growth for these companies. So we are structurally very positive, and we will be overweight in our portfolios wherever we can.
Interesting. Okay, so that's with regard to IT, and very clear view, George. Even from a medium term, you seem to be positive. So not exactly a tactical trade, right? That's not what you're looking to play in IT.
Not really. We today, because the cloud is too many, and we don't know 100% of every aspect of the artificial intelligence, how it is going to pan out and things like that. Therefore, you can say it is more of a tactical thinking at this point in time, but I think it will turn to more structural as we move forward. But if you see, most of the time when we are bought into a massive uncertainty, that's the time you will make a lot of money. So IT definitely is in that basket. Large private banks is another one, which is definitely in that basket again, which to me, it is looking like a very, very attractive bet. So financial services and IT becomes thumping the table bets from our side.
Excellent. You've given me the cue for the next one, financial services. What's not worked, George, over the last maybe couple of years, especially on the private sector, large private sector banking side of things? On the mid-small, I can understand. There's been some asset quality issues over there. But on the large private sector banking side of things, this massive derating of sorts, just because you're losing market share to PSU banks, you believe justified, not justified? You believe that trend can continue, and will multiples continue to compress? Is there scope for multiples to compress?
Yeah, very interesting point. I've been in the market for 25 years plus, and when I look at different decades, 1990 to 2000 was a different decade where TMT rally happened. Then the crash of .com, then the infra rally, then the Lehman crisis and global financial crisis fall. Then you saw the consumption rally, and the new rally post-COVID crash is the cyclical sectors doing well, and that tantamount to or coincided with the NPA peaking in the year 2020, non-performing assets peaking in the banking sector. So if you see from 2020 till now, the sector got the benefits of recoveries, because most of the companies which were over-leveraged were reducing their balance sheets, paying off to the banks and NBFCs. And that was the major impact in the last 5-6 years. So most of the balance sheets of all the banks got squeaky clean in the last 5-6 years. If you see PSU banks, they became the biggest winners, not because of the credit growth story, it's more of the recovery story, right? So going forward, my view is, the recovery phase is over. All the balance sheets have been cleaned up. Now is the underwriting capability comes into picture. And that's where some of the large private banks, which has proven their mettle over the last 20, 30, 40 years, will come into play, and, they will start doing very well in this phase. So I think 3-4 months, we are seeing the credit growth being double-digit credit growth kicking in, and plus IIP growth and plus the CapEx growth clearly visible from the private sector top 500 companies. There is a case for looking at these large private banks doing well. So if you see PSU banks and one of the largest private bank, which were in deep red in terms of NPAs in the year 2020, they are the ones they benefited the most, because the gross NPA was anywhere between 7.5% to 11.5%. which has come down to 2% now. So that is the story which played out in the banking space. But having said that, the consumption basket related banks and financials also underperformed in the last 5 years, like the entire consumption basket underperformed. So to my mind, the time has come for some of these large private banks, which are balance sheet clean, can take a more credit growth play into the portfolios. So I'm quite constructive from here on.
Last off, so you've left us with two big ideas, right? IT and banks. Anything from this earnings which has surprised you and which has suddenly turned favorable on in the manner in which you're looking at things, George?
Becoming constructive on the generic pharma space, because that is one pocket we think the valuation has become extremely attractive, and that's one of the sector which I've tracked a lot in my career, and I feel that there is a good room for surprise. And if you see the earnings momentum in the pharma space has been pretty robust this quarter. Second one is chemicals. That is one area where again a good surprise in earnings and beat in earnings has come in, and that could be one of the pockets. Textile spinners and yarn, all the textile related companies also have reported decent numbers. Sugar again is kicking in with a decent number. So I would say some of these not so in the limelight kind of sectors. Whereas, if you talk about AI, if you talk about semiconductors, that is a game in town. But I believe there are other sectors which in the broad-based sectors looking interesting, and the results have been pretty promising.
Okay. George, thank you so much for coming and giving us that perspective. The other thing you're positive on is cap goods, as I see it. But thank you. That's unfortunately all the time I have. I'm going to have to let you go.
Thank you. Thank you.
Thanks, George. Okay, time to slip into a very short break.